Hey, this is Danielle. Welcome to the free video. So tonight I'm going to be talking about Zoom and Zoom earnings. This was basically the talk of the day. This is definitely one of the biggest moving COVID stocks, as we call them over here. Basically one of the companies that is actually benefiting immensely from the pandemic rather than other companies like airliners that are feeling a lot of pain. So we went into this knowing that, of course, it's already up 365% on the year, and there's obviously people that will say, well, that's insane. How much higher could it go? But the fact of the matter is that in this market right now, what we're seeing is we're really seeing a stalling around the $3,500 price point in the S&P. And we've seen some pretty tight ranges. We haven't really seen a ton of movement coming out of the overall indexes. But what we have seen are stocks like this, where investors just want to pile into, okay? It's because we have no idea at this point how much longer this pandemic is going to last. It's looking like it's going to be quite a while. And these companies are just making money hand over fist because of it. So with Zoom, it turns out that the expected, let's see, I pull up my article right here. So we had 45 cents per share expected, but they doubled that, all right? 92 cents a share. Rev numbers are 663 million versus 500 million as expected. And the revenue grew 355% on an annualized basis in the second quarter, okay? So that's basically insane. Especially because in the prior quarter, they grew by 169%, okay? I mean, I don't know about you, but basically everyone everywhere is using Zoom, and if they're not, maybe they're using Hangouts or something like that. But Zoom absolutely had the biggest market space, and as far as, you know, what people know how to use, Zoom is the most popular, I would say. So their business has been growing immensely. Now, why does this matter? Well, I traded this in the options room today. It looks like actually some of my flies are going to blow through. Currently, Zoom is trading at $408 after hours after closing at $325, okay? This is a crazy move, and basically the way that we judge this is based off of the market maker move, okay? So on earnings, they will price in an expected move. Market makers priced in a $29 expected move. However, we are almost up $100 at this point, which is insane. We're up $85. So we're 2.5 times what the expected move is thus far. Now, the trades that I made in the trading room, I did 2, and they were pretty small because whenever I do earnings trades, I like to do them pretty small. The majority of my risk goes on my high probability trades that I do, mostly trending charts. So looking at this butterfly, number one, I did a 340, 350, 360 butterfly because I thought, well, you know, if we move just the expected move, I put this on when it was trading about 310. I was looking at it maybe trading to 350. No, I'm sorry, it was trading 320. So I had one fly right there, 65 cents, a very cheap fly. Obviously, this fly is completely blown through. Now, people will say, oh my gosh, well, I don't want to do flies because what if it blows through? Well, first of all, it cost 65 bucks. All right. Second of all, one thing that I can do that's very risky and aggressive, and if you don't know how to trade butterflies, do not do this. But if you do know what you're doing with butterflies, and if we're looking at Zoom and we think that it's going to just completely take off tomorrow and it's going to keep going, what I will do in that instance is I will buy back the short strike. So the short strike is at 350. And that's the one that's going against you in the butterfly. The 340 is not going against you. The 360 is not going against you, but the 350 is, okay? So what I'll do if I think it's going to go higher is I will close this out, which is going to be expensive, but then you can let the other ones ride. So that's a strategy that you can use. You can also close out the whole fly. You can also just let Thinkorswim close it out for you because all of the legs are in the money. It'll just close it out for 65 bucks and you'll lose your 65 bucks. Now, I did put on a second fly that would have been for a little bit more than twice the expected move, and I targeted the 400 strike. This one I only spent $1.25 and I bought two of these because I thought that one was a little bit more likely. But with these earnings trades, you don't know, right? You have two different ideas, two different targets, and I don't know where it's going to go, but I do know that it's most likely to be within 350 to 400, okay? So I put two trades on that were both cheap, thinking, one of them might work, but the second one is risking basically one to make 20. So if the other one loses money, it's not a big deal. When I really would have gotten hosed is if it traded lower, but that's why we control our risk, and I had less than $400 of risk on this entire trade with a $26,000 account. So it's obviously not a lot of risk. Looking at Zoom right now, we're coming back down to about 406, okay? Now you might be asking me, why did I go through this entire explanation? Well, I went through it, number one, because we have a lot of members right now who are messaging me about it. But number two, because I also want to talk about how I can trade it tomorrow. So we have a little something at Simpler Trading that we like to call the 2x move, and it's one of my favorite moves to trade, and it doesn't come up that often. So what is a 2x move? Well, a 2x move is when the ticker moves twice what was expected on earnings. Now, we already went over all this. It was expected to move $29. Twice that would be 60 bucks, right? And it's already moved $85. So it's actually 2.5 times move. So basically what happens is when we get a move like that, you just have people piling into this stock, right? And so normally what will happen is, number one, you have people piling in after market, which they are right now. And then typically the next day, you'll also see people piling in as well. So you can use Salesforce as an example. Salesforce gapped up on earnings overnight, and then you see what happened the next day. Look at this. You have Salesforce with their phenomenal earnings, and then it goes up overnight, it's flat, 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 opens up, and boom, up it goes. That's the kind of move that I'm looking for in Zoom. I don't know if it's going to happen, but I'm going to be looking at my charts bright and early, 8:30 a.m. And if and when I get a high volume breakout move, which looks like this, just like it did on Salesforce, I'm going to be buying some Zoom options. I'll probably have to manage the flies. I'm probably going to have to either buy back the center strike or just close them out right at the open. And then maybe buy some, let's see what we could buy. So normally the way that I would do this is, you can do it a couple different ways. John typically buys the options that are a little bit further dated because he likes to do it as a swing trade. For me, I'll do it as a swing trade sometimes. It just depends on the price of the options. So with these options right here, they're actually a pretty good price. So, I mean, buying these, and they're not going to be that price tomorrow, but let's just say we were looking at those tomorrow, Delta 50, Delta 60s that are expiring next week. That would be an example of a swing trade. If you said, I just want to get into it and get right back out for a day trade, I don't see any problem with using the ones that expire this week. Those are going to be the cheapest. Those are usually going to be the ones that are most available to people with small accounts. This is all going to change tomorrow because the market's closed right now. But if you want to take a very aggressive trade on Zoom for an after earnings momentum move, basically what you want to do is you want to wait for a 15-minute range breach. Go back to Salesforce if you're not sure what that looks like. You look at the first 15-minute range. Oops, sorry. Let me show you here. Let's go all the way back to when this has happened. It's going to be right here. So you want to look at your first 15-minute candle. First 15-minute candle. And then you see how the next candle after that, and sometimes it's the next candle after, sometimes it's two candles after. You get a big move, you break through the previous high, and it just keeps going. So usually I'll get in on the break of that previous high of the 15-minute candle. Some people are impatient. They get away right at the open. When it fails, you will know because it will immediately roll over and start filling the gap, okay? If you have the trend strength candles, you should be able to see that your candle colors are changing colors, falling to the downside. I love the trend strength candles because they have high volume and high momentum, so you can see which way the price action is going. So if you have those, make sure you check that out. That'll be really helpful for a momentum trade. Anyways, this has been a long video, but I wanted to explain those 3 setups. But also, I did want to let you know that I'm going to be having a webinar tomorrow, which I'm really excited about. I'm going to be having a webinar with Mark Chaikin. He's absolutely awesome. He's been in this industry for far longer than I have, and he knows exactly what he's doing. So we're going to be partnering up tomorrow, and we are going to be talking about just basically a combination of using technical and fundamental analysis together to identify high probability trades. So if you know anything about me, I am all about high probability. Okay, we're going to be giving you the 3 most important things to check before pulling the trigger on buying or selling. Why, everybody needs a fundamental resource. Here at Simpler, we're primarily technical traders, but you have to have fundamental backing, and you need a fundamental resource for that. For us, Chaikin is it. We're basically going to be talking about how I use that fundamental backing to score high probability trades. So come and check it out. Go to simplertrading.com/AMP. That's AMP. You can sign up right here, and I will see you tomorrow at 7 o'clock Central Time. Beyond that, I hope you have a fantastic day. Check out the price action in Zoom tomorrow morning, and I'll see you in the next one.